not an uncommon situation where I will have a corporation owned by multiple shareholders, and midway through the life of the corporation, they decide that they need to bring in additional capital to fund operations. And sometimes the source of that additional capital is one of the current shareholders. This morning I had a client that was in that exact situation, and what they wanted to do is get an influx of capital, specifically $70,000, and they were just trying to figure out the exact number of shares they would issue to the current shareholder so that the company could bring in the $70,000. So the first trick was to figure out what the value of the corporation was. In this email that I sent to the client, we made an assumption that the value would be a fair market value, and in this particular case, that fair market value would be $430,000 as agreed by all the shareholders. And we also knew what the current number of shares were that were issued by the company. So once we had those two figures, what we would do then is divide the value of the company by the number of shares issued, and we would then come up with a current value of a share, one share, and that was, in this particular case, $1.74 per share. So then what we decided was, if we wanted to bring in $70,000 worth of capital, we would divide $70,000 by the current price per share, and that would tell us how many shares we would have to sell from the corporation in order to reach our goal of bringing in $70,000. So in this particular case, that was selling 44,230 shares at a price of $1.74 per share, and then we would then end up with a corporation that had a total fair market value of $500,000, and the shareholders would all have the number of shares that would properly and currently reflect that per share price.